We have with us Feroze, Azeez, Deputy CEO, Anand, Rathi Wealth joining us this morning. Feroze, good morning. Thank you so much for taking out time on the last trading day of the week, tomorrow being Holi. What do you make of the market mood this morning?
Kartik, good morning. I think the market mood, to my mind, is a little more of a stalemate kind of a mode.
Okay.
Like you've seen in the last couple of years, markets always start with a no direction kind of start point more often than not. Earlier, there
Right.
used to be gap ups and gap down. Those are things of the past. So I personally think it is a quiet beginning to the day, and I think the direction would be derived out of the small and the mid cap spaces movement, which will happen after the large entities start their counters at about 9:45, 10.
All right. Well, I was hoping, in fact, Feroze, that markets would maybe have a positive start, a more positive start than what we are seeing on the charts, simply because inflation data came in pretty strong yesterday. Inflation cooling to 3.6%. Had markets priced that in already?
Yes, I think inflation was definitely priced in, and I think when you're looking at that kind of selling, which is unbattered selling from FIIs, these good news will only get factored in largely. Of course, a partial part of its coming lower was already factored in, and when the sentiment of sale is extensive, good news don't get priced in till things settle. So I think
Right.
that you will get this actual benefit of this kind of a cool off in about 8-10 days time.
All right. Well, we will wait for the actual impact of the cooling off of inflation. But from what is happening from geopolitics to geoeconomics and Trump tariffs and this constant flip-flop, again, are markets really completely now aware there are no more shocks that are likely to hit the markets, and the journey from here is likely to only settle down before it starts inching up, Feroze, to your mind?
Karthik, I think I see this market over the last couple of months as completely divided. One is Nifty. I personally think Nifty's bottom was 4th June to 4th June 2024 on the election day, where on the closing basis we were 21,885. It's unlikely that in this financial year we will reach that number again on Nifty. That's quite likely. We still have about 11, 12 trading sessions for this financial year. I think that will be the rock bottom for
Okay.
Nifty. Of course, markets, if there are new surprises, of course, can reach that level. I'm speaking about odds of 80-90%. That's point one. Because Bank Nifty, FIs have started longing Bank Nifty futures. If you see last 2-3 days data, you're
Okay.
seeing 700-800 crores of long, which happened on March 4th, 5th. When FI starts longing in the largest weight in the form of a thematic index, you know that Nifty has started getting some support. Then coming to
Right.
the broader market, there is some stocks, almost about 70, 80 stocks in the small cap 250 will take its own sweet time to earn back the shareholder confidence. So firstly, the FIIs sell, and then the deeper pockets FIIs sell, then the domestic institution sells, and then the retail loses hope. And then once it loses hope on a counter, revival of that is a grinding period of at least a year, year and a half. So there is 60, 70 stocks like that. And
Okay.
there is a Nifty, which I think is going to be very resilient.
All right, and let's talk about the investors coming to a grinding halt, or hopefully not. And let's look at that in the context of data released by AMFI yesterday, Feroze. And I just want to get your views on what exactly do you make of the data, because we saw that inflow into equity mutual fund dropped 26% to about 29,300 crore rupees in the month of February. And this was primarily due to a significant decline in investments in the small and mid caps schemes. And obviously, this is the sector which was most volatile and had been hit the most. Now, this is the second consecutive month of decline in inflows in equity funds. So what is your initial reaction to the data which is coming in on this 3 months of decline that we are seeing in equity mutual funds?
Yes, Karthik, how I see this data is a very, very promising data. One way to see it is it has declined. Why I would not be overly optimistic in saying what I'm going to say. If 30,000 crores of net flows happen, first check I do is it greater than the SIP collection, gross collection? 26,000 crores is the SIP collection, and your net flow is greater than that SIP, which is 30,000 crores. So that's 4,000 crores of net flow, even in lump sum. If you were to segregate this, that's a very good sign. Why do I call it as a very good sign in spite of it coming down from 50 odd thousand to almost about 40 odd thousand to almost about 30,000? in a successive month. Why do I call it positive? Now I have to take it into balance of a COVID time period. You'll be surprised, there were almost 9 to 10 months of FY21, the net flow was almost negative in spite of the SIP number being positive. Small cap also having 3,700 crores of net flow, that's one positive sign. Second, SIP numbers being lower than the net flow is a great sign. Third, in extreme situations, the last time you saw extensive outflows in small cap and general lump sum amounts were going out. That has not happened yet, and it is shocking me with this kind of carnage. If this kind of maturity retail and mutual fund investors are showing, it's unprecedented for sure if you go mathematical.
Okay, so let's look at that data and let's look at, in fact, the small cap and the mid cap carnage that you're talking about. And there's been obviously, a massive decline that we are seeing in both these indices. So 3,400 crore rupees versus 3,700 crore rupees in February, compared to about 5,100 crore and 5,700 crore rupees. This seems like carnage enough. Were you expecting a bigger sort of hit and lower inflows in these two segments, Feroze?
Yes, Kartik. See, what happens is there are some numbers which can go into negative zone. We have to remember that the equilibrium is not 5,000 crores. It's not just a zero number. And if there is 3 lakh crores, 2 lakh crores in SIP, in small cap funds, there could also be a minus 20,000 crores. That's what FIIs are being negative. Are you saying that if FIIs added some money in the small cap, would you see it so negatively? Similarly, if you look at DII getting money, not zero money, but they're getting 3,700 crores, which is the third highest for the last financial year. If that's not a shocker, because there are some numbers which stop at zero, right? But there are some numbers which could have also been minus 30,000 crores, minus 2 lakh crores, hypothetically, if everybody had to redeem their small cap money. So I see 3,700 crores as not a number which is greater than zero, because this number is a negative integer possibility.
All right. And let's talk about thematic funds. And thematic funds have, in fact, witnessed the highest net inflow. You were talking about Bank Nifty, Feroze. That, I understand, is where FIIs are likely to park their money going forward. But the thematic funds receiving inflows of about 5,700 crore rupees, followed by flexi cap funds which got about 5,100 odd crore rupees. Are these what do these signs tell you? That is this foreign institutional money which is very, very focused on certain sectors, or again is this retail participation that you're seeing?
I think whenever markets get divided a little, some portion being very attractive, some portion being absolutely ridiculously overvalued, thematics takes a front seat. That's what has happened, right? You have some sectors like banking. It's at 3-year lower P's or PBs. Price to book also it's 3-year lower than 1 sigma lower than the 3-year, 4-year means and medians. So I think whenever the market is very divergent, people become more picky of what portion of the market they wanting to buy. Large cap and thematic will get precedence, because there's not the entire market is attractive. In 2021, the full market was attractive. So that's why you see flexi cap, which is a quasi large cap fund, and thematic getting inflows. I think that's because that's a message that market is not finding, the investors are not finding the full market attractive, but are trying to cherry pick what they wish to buy in the current situation.
All right, cherry picking, but cherry picking definitely not happening in debt mutual funds, because they have seen the biggest sort of outflow, in recent times. So ultra short duration funds, for example, saw outflow of about 4,300 crore rupees, and money market funds saw again an outflow, minor outflow, 300 crore rupees, but an outflow nonetheless. So on the debt mutual fund side and on debt instruments per se, why is the tide turning bearish at this moment, Feroze?
I think if I have to tell you from a large trend perspective, the last quarter, generally most corporates were the largest portions of AUM owners, not in terms of number, but the large portion of the assets in liquids, ultra short funds, short-term bond funds, all comes from corporates. And the last quarter, especially February, March, is going to be something where they would want to have more liquidity than have investments. So this is precisely why they hold it in debt, not even long-term debt, which they intend to hold beyond 2 years. Now that tax benefit has also disappeared because of Section 50AA. So individuals are not attracted to it. So working capital limits are being parked in these funds, but they get more or less utilized during the fag end. substantially.
Right. And finally, I think the big headline number, the asset under management AUMs are down about 4% to about 64 lakh crore rupees. This as compared to 67.2 lakh crore rupees. So an overall reduction in AUM size of about give or take 2.5, 3 lakh crore rupees. Is this primarily because prices came down and hence obviously the size of the asset reduces? I doubt this has anything to do with too many SIPs stopping and people withdrawing money. What do you think of this number?
No, this see because the AUM is a summation of last month's AUM plus or minus net flow plus or minus mark to market. Net flow is positive, so the full reduction is attributed to mark to market. If mark to market is negative, which is I think I'm so happy that in a carnage where NSE 500 falls, 7-8%, and the mutual fund AUM falls 4%.
Right.
I think that speaks volumes about the risk management which gets respected during times like these. I was seeing the worst hit flexicap fund is 22% down from 1st of January. Worst hit stock in NSE 500 is down 47%.
Right.
Worst hit small cap fund is 23% down from 1st of January, not the February data. So when you look at mutual funds during downturns like these, the drawdowns are so muted relative to the stock owners, which I see stock portfolios, that it becomes easier to sail through the short term. And most stock investors are panicking and actually booking their losses
Right.
and making them actual full-time permanent losses. Mutual fund guys are, of course, not able to sleep easy, but they're still not redeeming the money and making that paper loss to an actual loss.
Right. So before I let you go, Feroze, final advice to retail investors watching our show, listening to you with bated breath. What is your one-line advice to them in this market, in these turbulent, volatile, geopolitical, geoeconomic times? What should be the strategy of a retail investor?
If you have anything greater than 40, 50%, 50% in small cap, move to large cap. Their bottom formation is very, very accurate.
All right, Feroze, we will leave it at that. Thank you so much for joining us this morning on Morning Brief at 9. Pleasure having you as always.